our guests who are joining us in studio as well, what they think at the start of the new trading. We've got Kush Bohra, founder of kushbohra.com, as well as Parag Thakkar, who's head fund manager at Fort Capital. Thank you so much, as always, gentlemen, for joining us in studio. Kush, let me start with you. The setup, we just spoke about some of those key levels and how that distribution is taking place. Do you see any positivity at the start, beyond, of course, the fact that we might see green at this start today?
You've heard of the saying, right? I mean, be careful what you wish for you because you might just get it. Friday, we spoke of the rebound rally missing because the indices aren't oversold on any parameter, be it PCR, be it RSI, be it valuations, P on the Nifty, as Parag Bhai will confirm. Friday, we got that wish. Because on Friday, the RSI actually fell to 22, which is very close to the oversold territories of 20. That's how I track it, 80-20. So very close to those levels. Now, incidentally, this is the lowest level that the RSI has been, guess since when? COVID crash, March 2020. Now, speaking of COVID crash, one interesting data point, if I may, bring out now. During COVID crash, obviously the indices fell much harder in percentage terms, but the breadth of the market is actually much, much worse right now. Oh. Yeah, let me just give you a comparison, and I compare this in terms of the 200-day moving average. How many stocks are below the 200-day moving average, right, for specific indices? Obviously, for Nifty, there was one point in time where all the Nifty 50 stocks were below the 200-day moving average, right, during the COVID crash, but then they recovered quickly. Right now, you've got only 42 or 80%, 84%, okay, of the Nifty stocks which are below the 200-day moving average. And I say only because it gets worse from there on. For Nifty 500, you had 77% or 385 stocks below the 200-day moving average then, and now you've got nearly 90%, 447 stocks below. Mid-cap, 80% stocks below the 200-day moving average, right now 87. And as you would expect, the worst hit of the lot is the small cap space, where of the 250 stocks, 177, then about 70% were below the 200-day moving average, and now you've got 228 above 90%, 91% stocks on the small cap index which are below the 200-day moving average. Now, there's a universe of about 29 indices that we track. Back then, 18, right now, all 29 indices below the 200-day moving average. Now, if this doesn't sound capitulation, I don't know what does, correct? Now, despite all of this, my key message is that if you've got that stash of funds hidden somewhere under your bed or wherever, you keep them, and a view of over 12 to 18 months, now would actually be a good time to start buying. And as I said, we've said that the Nifty has now gone to oversold territories on the RSI. This is perhaps when that elusive rebound rally might come in.
Wow. So I thought it was the reverse. People are removing money from the markets and putting it under their pillows because find some safety for cover. But that's an interesting point. Kush says time to start buying. Parag Bhai, good morning. Do you agree?
Yeah, I completely agree. Completely. The markets are completely oversold. One of the facts which I keep saying is that after the new RBI governor has come, he has taken some serious steps, right, to infuse liquidity into the market whenever market needs it, to cut repo rates by 25 bips, then to delay the norms which were there like LCR, ECL provisioning, project financing norms, then to reduce the risk weights for NBFCs. All these steps plus government steps of budget will take some time to deliver. Q3 GDP we have seen 6.2, which Q2 was 5.4. It's a slow and gradual recovery, which market is not looking at right now. Right now, it is exactly as Kush pointed out, it's a capitulation. One thing leads to another, right? If you are suffering loss somewhere, you will book some profit also somewhere. And it's a collateral damage and cascading effect which takes over. So I think it's a time to be greedy in the markets, and by till 28th March, I think you will have this window of opportunity. Generally, we have seen mid caps and small caps bottoming out on 28th March, because that is where the entire capitulation finally takes place. But as Kush said, this time it might be different because the capitulation has already happened. And we have seen some pockets of recovery. I'll tell you, for example, whatever channel checks I have done, for example, in central India and some of the, excluding south, cement prices have gone up. Some discounts have been given, but the prices have at least gone up by 2-3%. I think Birla Corp on one channel also said that prices in their region were up by 3% and demand was very good. Ultratech, I am hearing demand is very good. They are doing very well. And so I think this fall of Ultratech due to this 1800 crore investment, which is a 3-month profit of Ultratech. What people are talking about, stock has fallen by 17% and market cap has eroded by 20,000 crores.
Because of this, it's about 8%, right?
That's okay. I'm saying it should not fall only based on what I'm hearing about from the channel checks which I have done in the Ultratech markets. Ultratech can report 4,500 to 5,000 crore EBITDA in this quarter. If you see TVS numbers, for example, which reported 4,03,000, that was led by exports, which are higher margin products. 26% growth in exports, right? EV, they are leading now. Right, and Africa exports have rebounded, and there is huge opportunity to grow in Africa. Now, in spite of such numbers coming on Friday evening, Friday the stock falls by 5%. What capitulation is exactly is this, right? The stocks are falling in spite of good news, which are just coming up because nobody just cares.
Yeah, the good part is that now viewers, because you always heard about how there is safety in large caps, and if large caps were not falling, now large caps have falling. And that is an opportunity if you are indeed a long-term investor. Now, pick and choose, of course. You may want to buy an Ultratech or a TVS. You may want to buy a Mahindra & Mahindra. You may want to buy any of the other, HDFC Bank, ICICI Bank, what have you. So, pick and choose, but could be interesting. However, if you want to pick and choose for a trade perspective, let's see if Kush Bohra has some good ideas for you today. Kush.
Sure. Still going with a long and a short kind of a mix, because what I said just now was obviously a 12 to 18 month kind of a perspective. For today, things might actually pan out to be slightly differently. So still going with the long and short. On the short side, I've got Crompton Greaves for a short target of 318, 313, 328 being your stop loss. On the long side, ITD Cementation, the stock's been consolidating in a very tight band, which is also to say that it's not falling with the rest of the market, and you'll take that in a scenario like this. So ITD Cementation looks like a very good positional play as well, but from a near-term perspective, 550, 565 being the targets, 520 is the stop loss, so ITD Cementation on the long side.
Okay.
Parag bhai, what about you? Since you are saying it's time to be greedy, two-part question. One is, what is the perspective? Is it again at 12 to 18 months?
Absolutely. So we have to keep that way.
And then what? If I want to be greedy right now, pull out the money from under the pillow or wherever it is. I love this, thing. Where do I put it?
So basically, as I said, so there are always some pockets of value where in large caps, as I pointed out, select cement companies like Ultratech, Birla Corp, and this again from 12 to 18 month perspective, I am saying, not from today's perspective. I hope and I wish that from here on we will see a recovery. But because the valuations have become attractive due to this capitulation. But I would say that. So apart from Ultratech, TVS Motors or Birla Corp, which I have already mentioned, I think steel stocks also are looking like forming a complete bottom, because definitely when you are, ArcelorMittal in between said that European inventories are low, right? That's a lesser of a problem for companies like Tata Steel. JSPL promoters, last time we discussed, they bought worth around 800 crores from the market, their own stock, right? So I am saying that there are clear signs that steel prices in India have bottomed out, and so definitely steel stocks will also see some. So these are my pockets.
Duty, you would believe that's an added incentive.
If it comes, it's great
added.
for. It's
but you would buy it otherwise also.
Yeah, I will buy it otherwise also, because I feel that prices are at bottom.
Since you're talking about things to buy or what have you, there is this very decorated fund manager who writes a daily or a weekly column in one of the newspapers, and he's made this interesting observation. Maybe it's a fun fact, but he's serious about it. I spoke to him, right? And the point is that there were 65 crore people who visited Mahakumbh. A lot of them lost their footwear and were walking barefoot.
Oh,
No. Think about this. So yeah, you mentioned this, right? That Q4 GDP could get a push from Uttar Pradesh, right?
Chief Economic Advisor said
Simple.
So you're talking about Bata and Relaxo?
Why not? Why not? So that plus the whole, the chain of companies which do consumer durable sales in Uttar Pradesh, could that come in a revival? Because everybody's not just gone to Mahakumbh. With that pretext, they have done the religious tourism of that exists in the state.
The Prayagraj region.
Yeah. Everything, yeah. So I wonder if that comes as a focal point.
Corny, come back to the footwear. If, say, 1 crore people lost their footwear, another 1 crore got that footwear. So they are not going to buy that.
Yeah, but no.
It's gone from here to here.
But immediacy, there will be buying.
No, just to add to what Neeraj said, Birla Corp, for example, primarily sells in UP markets, right? Central India and UP. And now they will have a good volume growth also. And this is what the CEO has said on the channel. I am not, I don't have any insights into it. And the point is that EBITDA per ton has also improved significantly. I think from what he said on the channel, it is 230 rupees per ton improvement QOQ on EBITDA basis. And UP election is going to be in FY27. So government is definitely going to focus more on UP development, and which will benefit companies like this. Yeah. And it is trading at below, for example, if Ultratech puts up a new capacity today at $80 per ton, and Birla Corp is valued at say $80 per ton, of course their locations are very good. You know, the enterprise value should come to 15,000 crore, and they have a 3,000 crore debt. So market equity should be valued at 12,000 crore, versus that it is 7,500 crore today.
So there is value on the table.
So I'm saying just replacement also, you are having so much value on the table.
Let's take you through one or a few key takeaways from a meeting that was conducted by the Association of Mutual Funds in India. And the reason I'm pointing this out is because it lends itself to what we were just speaking about. The fact that the small cap index is down 25, 26 odd %, and the constituents of that small cap index, 90% of them have fallen below their 200-day moving average. I'm contending, and I would love for the people sitting with me to weigh in on this, that the pain is not over. And the reason I say this is that look at the SIP data, right? You have mutual fund SIP AUM that has grown to 10.62 lakh crore as of March 2024. It was at 2.7 lakh crore in March of 2019. So it's a significant growth. Equity SIPs have accounted for more than 80% of that over the course of the last 5 years. It continues to be the case. But take a look at the component that saw the biggest growth, that is small cap SIPs. They have dominated, and that stands at 1.24 lakh crore rupees despite the fall in small caps over the past few months. That's grown from 19,000 crore rupees in 2019. Now take a look at this data point, which is the fact that SIP assets account for more than half of the total AUM of small cap schemes. And you pair that with the fact that over the last few months, you've seen more number of cancellations of SIPs. Additionally, 16% of SIPs only have gone past the 5-year mark. So most of those SIPs are actually nearer to the last 2 or 3 years. It's likely that retail investors will see red in their portfolio, will say, look, I don't want more losses, will cancel more, there will be more redemption, there will be more sale of small caps. That's my view. I don't know what you guys think about it.
So just a counter to that, Alex, because a lot of people have seen, not for the same reasons, but this cycle in COVID. And then they have seen the benefit of sticking on or putting in more. So maybe with the right approach, message there, and enough information, people will not lose out on an opportunity that there is.
I mean, that's true.
Withdrawing or stopping at this point would be
it's a terrible idea.
Yeah, we have to highlight that even as you put the data out. This is the worst thing that you can do right now to your portfolio.
Simply because you accumulate more units when the chips are down. That's the most basic point, and that's the ultimate objective of the SIP.
Absolutely. And I'll add one more point. See, it makes sense if suppose your macros were bad, right? Your current account deficit, fiscal deficit, your corporate debt to GDP, your banking balance sheets, if they were bad, I would say that, okay, still you can throw in the towel. Okay, because you are still making money. I'm not saying last 3 years as SIP investors, but I'm saying over a period of time who have seen the cycle, who have done long-term investing through SIPs, they are still making money. So but this time it is not the case. The macros are only going to improve from here.
Yeah.
Crude oil at 72, 73 or whatever below 80 is definitely another positive for India. All these positives are getting ignored due to this Trump tariffs and Teslas of the world, and there is so much of noise. You know, which is, and plus, of course, the capitulation which market has seen, and also DeepSeek, and you know, there are one after the other. These narratives, negative narratives, have kept on coming.
So, since we are talking of capitulation, I would love to know both technically and fundamentally, are cable and wire stocks giving an opportunity? Parag, I'll start with you. Why or why not?
So, my view is that see, the starting PE multiples were very high.
Yeah.
So they might bounce back because there was a overreaction. But I would stick to Ultratech, where I am saying that, you know, on a 2,92,000 crore market cap, and very
No,
insignificant.
but you can't
debt.
have 50% of a portfolio in Ultratech, right?
No,
so my
I'm not
question
saying
is,
that.
would you buy into these stocks? Ultratech is a cement company, right?
Yeah, no. So I'll not buy into these stocks just
You know.
because of a short-term bounce. Because see, ultimately, what we saw in Asian Paints, right? That competition came in. Some people ignored it that Asian Paints is really a great company. But the point is that ultimately a large player entering in will cap your margins at some point.
What about autos? Parag bhai, we took Kush's view. He liked
So
M&M and TVS.
TVS and Mahindra are my portfolio holdings, and I would like to stick my neck out and say that TVS Motors is a great company, superb corporate governance, negligible debt, and their exports are growing. Exports are high margin business. The electric vehicles are doing very well. They are launching new products. Right, everything is rupee is depreciating, so exports will help. Exports is now 30% of the last one's volume.
Interesting.
Right, so and so rupee is depreciating, that will help. Plus, there are, I would say that they are entering into all new products with high prices also. So the product mix is improving. Plus the PLI benefit which they are going to get in this quarter. Right, so I am saying margins are going to improve, volumes are improving. And they are
What
gaining
about
market
Tata
share.
Motors? We spoke about what the picks at Tata Motors. Numbers look quite disappointing. Are you expecting more pain today? I'm going to ask Parag bhai and then Kush this question. He's giving this side eye.
Let him answer.
What is the range of emotion?
So,
It's 45% off 52-week highs at Tata Motors.
that, and there have been so many technical levels that it's broken on the downside that it just becomes a little difficult to now call it that perhaps is a good time to buy. Again, everything might look good from 12 to 18 month perspective, even Tata Motors perhaps, but the reason the reason for that smile and that look is because it had that 50% retracement support, it had that 61.8 retracement percent support, 61.8% retracement support. It's not holding up. Maybe the last bit has to do with what the market is doing and not the stock itself, right? So from that perspective, again, a long-term horizon, you might want to consider, but I believe to go with strength, and I've seen strength in Mahindra and Mahindra to some degree in Maruti as well. But if I were to still pick, I would pick Mahindra and Mahindra. Tata Motors, just for now, I would avoid.
Avoid Tata Motors, M&M, TVS and Ultratech are some of the top ideas have been discussed today. Soni Patnaik joins us this morning. Soni, very good morning to you. Is it looking like a good morning? At least for our viewers who are looking for ideas. Let's start with your index calls.
Good morning, everyone. Thank you for having me on your show. I think, yes, Tamanna, today is looking like a good morning. And it's just on the mere fact, that we can see Nifty is in quite deeply oversold levels on technical parameters. It's a possibility that 22,000 level holds as a support and bounces, but then the bounce back can be seen towards a 22,500 to 22,600 range initially to begin with. Only if this range is taken out, it can head towards 23,000 odd levels. And this is for the whole of March series is what I'm looking at. The range could play out between 22,000 to 23,000 for the March series. If it's able to cross the 23,000 mark, then we can say that, the bottom out has happened and, it can head higher towards even a 24,000 mark, but then that's the next level to follow. For now, with a 22,000 support on a closing basis, one can actually buy Nifty at current levels, keep a stop loss of 22,000 on closing basis, and look for higher targets towards 500 plus levels.
So that's the benchmark call there. But Soni, you've got one pick as well. Incidentally, I think Neeraj also spoke about it this morning, but this is on a technical basis. Indigo is what you like, right?
Yes, Alex. Hi, good morning.
Hi.
So Indigo is what I'm looking at. It is actually holding on to a range of 4,400 as a support on closing basis. Although 2-3 days ago, it had shown a strong breakout on charts. Of course, with the market volatility, it did not cross the 4,600 level, but it held on to the support. Now, again, that it's bouncing back from where the put writers have positioned themselves around 4,400 level. One can buy at current levels, keep a stop loss of 4,400. The targets to look forward would be towards 4,650. If it's able to sustain above 4,650, a positional target towards 4,800 also can be looked forward, but then that's a second level to follow. I think from current levels, with a good support of 4,400, one can buy for targets of 4,650.
Okay, we're talking about some of the stocks which might show a bounce or no, and in a minute we'll get to know, but with the presumption that there might be some green on the screen today, Kush Bohra, those stocks, the cable and wire stocks, do they give a trading opportunity?
Some of them do. Let's say between a KEI, Polycab and an RR Kabel, I'm just going to rank them. KEI looks like a buy, bit neutral on Polycab, and RR Kabel is an avoid. The reason is on the weekly setup, KEI has a positive divergence and taking support at the 78.6% retracement. Polycab is breaking below that, has broken below that on Friday, and even the RSI has actually slipped a little negative. The only reason RR Kabel might bounce back today or maybe in the days to come is because it's gone below the oversold territory of oversold threshold of 20. So from there on a bounce, a technical bounce, a dead cat bounce is likely. But given that kind of a setup and that it's not seen any kind of recovery, this is an avoid. So as I said, KEI, buy, Polycab fairly neutral on this one at the moment, and RR Kabel is an avoid even if you see any kind of a bounce on this one, let's say today or tomorrow.
Fresh longs in KEI in Friday's session. That was something, that you saw, and therefore interesting to see if this continues or no. It's such a packed morning. We haven't had a chance to talk about the biggest losing index of Friday, which is IT. We'll talk about that as well, but it's the time for the big brokerage call of the morning. And that is Jefferies, which has initiated a buy call on Adani Wilmar. Harsh Johnson with more on this. Harsh, good morning.
Good morning. Target price 370, 50% upside from here. Jefferies suggesting that Adani Wilmar houses the leading brand of staples in India. Edible oil, wheat flour, rice, etc., all of that covered within the ambit. It's a story which they are pursuing from a perspective that it's a proxy for formalization of the staples category under the brand name Fortune, and that's the umbrella brand of the company. And of course now it's venturing beyond the edible oils business. Edible oils obviously has been the mainstay business of the company, but it's venturing beyond. The lower margins, they're justifying that by suggesting that it's a category feature, point number one. Point number two, that the higher asset turnover is driving ROCE for it, and that's what the key metric is for them. So they're expecting a like-for-like growth of 20% CAGR on the EPS number from FY24 to 27, so very healthy in that sense. And they believe that valuations also don't look too steep. At 25 times FY26 EPS, not bad at all at 25 times. FY26 expected the number is, the valuation number seems like. Now in terms of risks, one, commodity price volatility, government regulations and losses in the Bangladesh business. Those are three factors you'll have to watch out for. But otherwise, super positive, 370 being the target price.
Okay, all right. Harsh, thanks so much for that. Keep a watch on Adani Wilmar in trade today. Let's see how it reacts. Let's talk about IT though, and we were talking about the stocks and the sectors that got beaten down on Friday that could see a bounce today. Is that going to be IT? Something like a TCS got beaten down with high delivery as well, I might point out. And all of those names in the green, at least in pre-open. Let's see if that continues over the course of the session. But any opportunities here, Kush?
So if I can give a global perspective, starting from NASDAQ, for the last 2.5 months, NASDAQ has seen multiple legs of negative divergence, which means that the index kept going up, but the strength was missing. And now, with the kind of fall that you've seen over the last week, 10 days, the index actually has hit an oversold mark and then rebounding from there. So if the sentiment turns a little negative on the global front, the ripple effects are going to be felt here, in India as well. The likes of TCS, Infosys still reeling under pressure. Not a big fan just yet. HCL Tech and Persistent are the two stocks we like. Persistent still looks good, but I'm going to add a third name to the list, which is FSL. This stock has not given up, as much as even the big names have. It's still consolidating, albeit with a negative bias, but still holding up above the key averages. So FSL is one stock that you can keep on your radar from a near-term, even a medium-term kind of a buying perspective. I'm not sure if the fall in IT is over just yet.
Okay. Look at what's moving on the index right now, at least in the pre-open session. Pre-open session has ended and muted gains, actually, about 69, 70 points up on the Nifty. Is there a long in place? That's one question. Ultratech seems to be buzzing. Ultratech, iShares, M&M, these are some of the stocks that we talked about. Look at it, TVS, Motors. So auto in focus. Soni, let me come to you on this, in fact. What would be your play on an M&M? TVS, and let me add an Ultratech to that list.
So, Tamana, entire cement sector has seen rollovers, but Ultratech is the only stock which has actually seen short rollovers for the March series. So, anywhere towards 10,500 to 10,800. Now, that range is very crucial. It may act as a resistance. There could be some selling pressure seen from those levels. Immediate basis, again, if the 10,000 support breaks, the stock can fall lower towards a 9,500. I think it's quite crucial to let the resistance break and then only form any sort of longs in the stock. Otherwise, it's an avoid from here. If we talk about TVS Motor and M&M, I think TVS Motor is also decent, although the entire auto space, M&M is the only stock which has seen some decent rollovers, but TVS Motor 20 to 40 is going to act as a support. If that holds, there's a possibility that it can head towards a 2700, 2720 odd mark. So not much from a positional basis, but if 2240 holds for TVS Motor, one can attempt and long for targets of 2700 to 2720.
All right. Okay, so that's a view on stocks that are buzzing at the start, and let's see if that momentum continues. But one stock that got beaten down very heavily on Friday, that was on Tamanna's list this morning, BSE. It was down over 10%, remember, on Friday. It is starting off maybe just a bit negative, but I want to get Kush's view very quickly on this one. Kush?
Not a bad idea to start accumulating. I mean, of course, the stock had run up quite a bit, and as we were discussing, some pockets of strength will obviously get sold into in the entire market weakness. That's been the case with BSE. It's held up for the most part of this fall and has a good support zone around the 4,400, 4,450 mark. So if in a dip you get it close to that, then even better. But BSE is one stock that you want to keep on your radar on the long side.
Okay. Well, so BSE, keep on radar on the long side for now. There are some clouds, but 30 seconds left for the markets to kickstart trade. My question to Soni Patnaik is, Soni, now that you've seen the pre-open trades, either from your set of stocks or something else, what is your top call for the day? 20 seconds, Soni.
I think the top call for the day would be to look into Polycab. Now, Polycab is seeing some sort of a reversal. However, if it breaks above a 4,900 mark, that would be on my radar for the day. Above 4,900, it can again attempt to retest towards a 5,150 odd mark. It's a trading call, and with 4,800 as a support.
Specifically, one of the worst performers, Kim's. And this is a stock that is down about 8%, 8.3% as we speak. Also in the broader healthcare space, you have Suven Pharma that is losing about 6% or thereabouts. But specifically on these two counters, Soni, I'm wondering what you're seeing in these two counters that is leading, because I can't call any major fundamental news unless I've missed the beat on this. What are you seeing on the technicals?
Alex, not much from the technical or derivative data points either. So I think, overall, if we just look at on just basically charts, basic and Suven Pharma specifically, stock looks like it has given a very major breakdown and possibility that it continues to test the lower levels towards 1,080 odd mark. However, of course, if it holds the 1,080, one can see it bouncing back, but it's mostly of a sell on rise structure on charts that can be seen. 1160 is a very crucial resistance for the stock to follow.
On the upside, there are a few stocks that are gaining ground. Things like ITI looking good, up about 4.4%. Godrej Agrovet is up about 3.6% or so. Natco Pharma, Welspun Corporation of India, TVS among the top gainers, as we pointed out, 3.3% higher. And we've gone into some of the details there. But something like a PFC also doing particularly well today in trade today. Perhaps the stock got beaten down in the recent past. It's bouncing back just a tad bit. I'm wondering, Parag bhai, what you think about PFC REC. It's not a conversation we've had a lot in the recent past. Yeah. But having said that, there was a lot of interest towards the end of last year because of this entire, and I understand you don't buy based on narratives, but there was a conversation about power demand, about the need for funding of these companies and these projects. PFC REC, therefore, what's the view?
So basically, I don't own them in the portfolio. Let me make a disclaimer. But yeah, they're very cheap and very attractively valued stocks. Plus, I think there's a brokerage report today which will excite the market. So, okay. And dividend yield is also very good.
Okay. Kush, anything on the charts that is indicating that these would be a buy at this juncture, PFC REC?
So again, PFC has relative strength, but other than that, REC continues to reel under pressure. What we are seeing is a bit of a short covering bounce, from oversold territories. But I wouldn't read too much into it. Until these stocks cross the key resistance marks, I don't think you should go out and buy these just yet.
I wonder if Escorts is duly reacting as well to the numbers, because agri growth was very strong in quarter. I think the highest growth since September 23, and tractor numbers were looking okay. So both M&M and Escorts would be lovely to see from amongst the auto names. Are these looking good? Both of them, interestingly, 2%. Sony Patnaik, from a trader's perspective, right? Do M&M, Escorts, and the likes give a trading opportunity on the long side?
So M&M, although it has taken the support from around 2600 odd levels, plus minus 30 points, I'm still keeping as a leverage. The bounce back that we can see today, it still needs to cross the 2700, 2720 odd levels. If it's able to cross that mark, then you can see, there's a possibility that it again heads towards a 2800 to 2850 odd levels. That's important to hold. Right now, maybe just avoid and wait for the 2700 resistance to cross to initiate a long position towards 2850 target.
2.2% higher for these. So not bad. I mean, we're not sustaining though, I must say, because just 0.25% now for the Nifty, 22,184. So selling at higher levels, Bank Nifty in the red, in fact. Small caps have gone into the red again. So this was a short-lived hurrah. Let's see. It's volatile and it's choppy, but short-lived. IT too, from being 1% higher, is now just about 0.4% higher. Now, we spoke about this technically. Parag bhai, I don't know if we spoke about IT or no, but if we haven't, right, with you, fundamentally, does such a steep corrective move in IT, not just for Friday, but for the last few days, right, give you a chance to buy into high quality compounders? They've always climbed the wall of worry, Y2K, Absolutely. This, that, etc.
Yeah.
Is AI a different threat?
So basically, it's very difficult to understand the exact impact of AI as of now, and that is why one of the reason, plus DeepSeek, and plus most importantly, the narrative around US growth changing has affected the IT stocks, because a lot of money moved to US, if you remember, and that time IT was outperforming, right? Because the narrative was that due to Trump, US will be the growth engine of the world, and now that narrative is changing because of this tariff thing and all that. So IT has come down, and as you rightly pointed, it's a very high quality sector. Right now we are extremely underweight, luckily, extremely underweight. We just have one stock, which is TCS, and also very significantly lesser weight than benchmark. And we'll keep close watch on this. We don't want to miss out a big fall like this in this high quality sector. We'll keep a watch on this, and we'll keep watch on what narrative market builds around US, and of course rupee is going to help them.
I was going to ask you about that.
So like TVS Motors, I said, which has 30% exports, IT is 100% exports. So rupee will definitely help IT companies too. So at some point you need to buy.
I do want to make the point though, it was in my list, but I didn't make the point. Rupee closed very sharply lower on Friday, in case we missed it, 32 paise lower, in fact. 87.5. Do we have so 87.3. It's recovered somewhat in trade today, but it's still past that 87 mark. Parag bhai, you made the point on TVS, you made the point on IT. What other companies stand to benefit in a big way in Q4 at least, when you're talking about repatriation? And so I've also read that a large number of these companies do hedge. So therefore the impact would be
slightly less. Yeah, definitely.
So what would you watch for?
So I'll say, see, for example, TVS and Bajaj Auto both are. So while I am very, very bullish on TVS because of the launches which they are doing in every segment, and they are, see one of the announcement by TVS also is that they have taken a price hike in Jupiter segment. Now out of this 4 lakh vehicles which they have sold in this month, 80,000 is Jupiter. So 20% of the portfolio, they have taken a price hike also. In such a situation where everything else is slowing down, or some of the peers' numbers are looking very bad, right? So Jupiter is actually inventory is less in the system. So on one hand, you have those kind of this kind of domestic market share gain-led story, plus exports, plus new launches, and of course PLI benefit, which is very good benefit. So this is one thing. What I'm trying to say is all chemicals, pharma, and IT, mostly IT, right, will benefit from rupee depreciation. The only thing in IT was that market went too much overboard in thinking that US will be the growth engine of the world, and now that theory is shaking a bit because of this tariff fears.
Having said that, IT is one of the lone performers today, apart from auto. IT and auto is what's keeping the market up. On your mid-cap and small-cap space, I know it's become like almost, don't talk about this right now, just flee to, large caps. But having said that, Kush, let me come to you on, what opportunities lie there. Because at the end of the day, for people who have some patience and are looking for those quantum of gains, they will continue and need to continue hunting.
Well, see, the real test right now is not, on the levels or the fundamentals. It's more on the psychology. Everyone that I've spoken to has now, lost patience. So that is where I think things start to get, a little dicey. And perhaps that's the sign that, the bottom is near, if nothing else, at least from a psychological standpoint. Again, the stocks that we've discussed in the recent past, something like a Narayana Hrudayalaya, correct, and the likes that continue to do well, Reddington. These are spaces, these are pockets within the small and mid-cap space which have actually done rather well. So why not buy strength? Now, as far as bottom fishing goes, again, some of these names, but you would still want to wait for the dust to clear and then go out in a big way. I would still bet on something, as I said, something like a Narayana Hrudayalaya and a Reddington in a market like this also from a long trade perspective.
Okay, well, watch out for some of these stocks, could be interesting ones. I had one question, first to Soni Patnaik before we thank her. Soni, fresh shorts seen in Friday's session on IndusInd Bank. It had a sharp gash and it's a cheap bank in terms of valuations, but still saw some heavy selling. What do the positions look like on this one?
Neeraj, it certainly looks weak. Even on charts and derivative data combined together, it sees that the next level is around 930 to 920 range, which it can test. And as of now, the resistance is growing stronger around 980, 985. The structure looks pretty much like a sell on rise for this particular stock, and there's a possibility that it actually tests the 930, 920 support before showing any bounce back from here. So if anybody is holding on to the shorts in the stock, can continue to hold with a trailing stop loss of 980 and a downside target towards 920 can be seen.
Okay, so now two stocks. And Parag bhai, come in on this one. IndusInd Bank, right? For the longest time, people said, oh, below 1 times book. Why would people not want to buy at some point of time? So, but the stock is getting punished while the other large banks are not. What's your view here?
So, we don't hold it in the portfolio. The only thing which kept me away from IndusInd was microfinance book.
But now the RBI is coming out and saying that, okay.
No, they're just reducing the risk weights, right? The risk weights given to the NBFCs is reduced. That does not mean that you are going to recover money from the borrowers to whom you have lended. Those borrowers need to be bailed out, right? So I have not changed my view on that particular thing. I am still waiting for things to unfold. And by the way, I hold ICICI, SBI, and of course, Federal Bank is one of my favorite in the portfolio. So basically, I have chosen banks which have secured lending. So Federal is, although the ROA is lesser than IndusInd, but as we discussed last time, right, that high ROA banks have given loans to higher yielding but slightly unsecured and slightly riskier assets. And that is in problem right now. So I think I would go with the conservative low ROA banks like Federal in such scenario where of course the risk appetite in the system, if it improves and if the economy really improves, you will get a higher delta in IndusInd kind of names.
Sure, got it. Okay, but by the way, as we speak, and while IT is very volatile and up about 1% again, small caps are still feeling the pressure. So 1.28% lower, independent of what US is doing or what the Nifty may be doing, that space continues to remain under pressure. And viewers, this is despite small cap activity in the mutual fund space looking fairly okay. So bear that in mind as well. Okay, we need to thank our guests for coming on the show today. So Soni, thanks much for joining me today. Parag bhai, Kush, great having you this morning. Thanks for kickstarting the week with us.